Today is Sunday, January 5th, and this is my first update of 2025 on my progress beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. These are going to be all of my positions, which right now I have 11 of. My top 5 are going to be Nvidia, Meta, Microsoft, PayPal, and Costco, and together those make up 37.41% of my portfolio. I'm definitely not heavily invested to start out the year. Right now I only have 58.35% of my portfolio invested, which means I have 41.65 sitting in cash. As it becomes clearer as to which direction the markets are going to go to start off the year, I'm definitely going to look to utilize some of that cash, whether that be dollar cost averaging into some of my better positions that have fallen, or increasing my biggest winners if the markets go upwards. Going into 2025, I knew I wanted to have as many Mag 7 stocks as possible. I ultimately went with Nvidia, Microsoft, and Meta. I based my decision off of which ones to choose from the RSI, free cash flow margin, and the price to free cash flow. Out of all 7, Nvidia by far had the very best with 49.92%. Meta came in at second with 33.44%. And then Microsoft had the third best at 28.59. When it comes to RSI, the lower the number indicates the more oversold the position is. So Microsoft had the lowest RSI at 38.07. Meta had the second lowest at 44.08. And Nvidia had the third lowest at 45.17. So between RSI and free cash flow margin, Meta, Microsoft, and Nvidia were in the top 3 out of all 7. For the price to free cash flow, Meta was number 1 out of all 7 at 29.14. Microsoft was only the 4th best at 43.33. And Nvidia's price to free cash flow was 58.84, which is only behind Tesla's. But considering their free cash flow margin is 49.92%, that's totally fine. Like I said before, I would have totally been fine buying all 7, but unfortunately Amazon, Alphabet, Apple, and Tesla just wasn't quite what I was looking for. This is what the SPY chart's going to look like right now. This blue vertical line represents the start of the new year. On Thursday, the SPY price closed below this black support level. It did manage to get back above it today, and in the process also got back above the 5-day moving average. Right now, the SPY price sits below the 15, but like I said, above the 5, which is one of the reasons why I still have slightly over 40% of my portfolio sitting in cash. I don't want to jump the gun too early and assume the market's going to go upwards, because we could very easily have another fake out like we did towards the end of December, and it would turn out that the market's actually in a downward trend. I do still have just below 60% of my portfolio invested, so ideally what I would like to see is the SPY price to get above the 15 along with the 5-day, and then remain there for 2 or 3 trading sessions. And at that point, I would feel a lot more comfortable about utilizing the cash that I have. Since the start of the new year, my portfolio has a gain of 0.77%. The S&P 500 has a gain of 0.66, and Pershing Square is at a gain of 0.44. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.